And certainly, firstly, I'd like to welcome everyone to the call today. Today is a really positive day for the company, and it's all around giving our investors a market update on how we're performing and where we're going. But before I get into the highlights of today, I really want to acknowledge our people. There will be a lot of our people on this call listening in today, and today is really off the back of their performance and achievement. And one thing that they've really done in the last 12 months is step up and really live and breathe what we stand for as a business. Live for the challenge, smarter together, never give up, and have each other's backs. And I think what you're seeing today is clear evidence of our people living and breathing what we stand for. And what I'm really talking about there is culture. And to me, in business, it's not about the best widget or the smartest strategy. It's having the right people and the right culture to deliver. And then it's having the focus and the discipline to execute. And to me, today is clear evidence of us continuing to do what we said we would do. And I want to thank our people. I'm very proud to be part of this business, and I'm proud to go to work every day with the people that we have. So we might start with the key highlights on slide 2. And as I said at the start of this call, it's a really positive day for our business in terms of how we're performing as a company. Starting with the first dot point, FY22 EBITDA is expected to be the top end of our previous guidance of 54 to 57 million, which is really positive in terms of how we've concluded the year. Today's not we haven't gone through the audit process fully at this point in time, so today is very much a high-level overview, and we'll go a lot more granular in the full-year results. Underpinning the EBITDA performance is really strong operating cash flow with EBITDA to cash conversion of circa 105%. And that is really evidence of the continued strong cash generation in the business. And it's been a massive change for us. In the last 2 or 3 years, the net cash positive movement for us has been significant. And that cash generation has continued. You can kind of see our net cash position is now 20.5 million. And that's after funding the acquisition of WBHO infrastructure in March of this year, and it's something I'm really pleased with. I mean, there's profit and then there's cash. And I think I've said on previous calls, one of the few benefits of the pandemic in our business is really driving the understanding of the importance of cash in the business. It might sound like common sense, but it can be quite heavily focused on profit, but it's also around ensuring that is underpinned by cash and cash generation. And that is very much part of our DNA, and we've consistently generated really positive operating cash in the last 2 to 3 years, and we expect that to continue moving forward. I think also pleasingly the margin performance has continued to improve, and it's really strong again in the second half. If you recall, at the first half of this year, our EBITDA margin percentage went from 7.2 to around about 9%, and that performance has continued in the second half of this year. And that's really underpinned by really disciplined and focused operational execution. Look, it has not been an easy environment on which we've been operating in our businesses, and the disciplined focus of our frontline leaders, who in my mind are the kings and queens of our business, and it's how we support them. Their disciplined focus on execution is really driving that margin performance. But I think it also runs a little bit deeper than that. If you look at the strength and diversity of our business today, it's really providing that protection against labour and cost pressures. That's very much a hot topic in the market today. But if you look at the strength and profile of our business today, very much more towards that annuity recurring style, long-term contract type business. And what that provides is that sort of risk protection around having rise and fall mechanisms in your contracts. They're very much linked to the site-based costs, which gives you nearly complete protection against those cost movements where you can pass those through. And that's really allowing us to continue to drive our margin performance. And today you're seeing really clear continued evidence of that. And I think it also, the other strength of our business is the diversity of the business. We're not wedded to one sector, one geography, one client. It's the strength and diversity of what we do. Certainly in pockets there's challenges around labour, but the holistic business is giving, I always call it a natural hedge. The diverse nature of our business is we're not wedded to any one area, and it gives us that natural hedge in terms of not being exposed, but also gives you a very broad platform of opportunity in which to grow and drive your business moving forward. And look, I'm not saying there hasn't been challenges around labour and cost, but it's one that we've stepped up and managed and continue to manage well. And really the margin performance is terrific evidence of that. WHO Infrastructure is now successfully integrated into SRG Global, and I'm really pleased with how that has started. And it's really, to me, the focus in the first few months has more been around the cultural alignment. And we knew coming into acquiring WHO Infrastructure here in the West that terrific people, terrific leadership, a really strong business. We've worked closely together previously, so we knew that cultural alignment was there. And I think Will and his team have done a terrific job in the first few months in terms of really engaging in the business. And we're already seeing evidence early on in terms of that engagement, the cross-selling opportunities, the new skills that they bring, and new clients that they bring that we also provide opportunities as well. And I'm really pleased at how that has started today, and I'm really bullish on where that business goes within the SRG family. So look, terrific business, and I'm really pleased at how that has started. And I think FY23 will be a really positive year for that business. Which is a good segue into work in hand. We've got record work in hand of 1.3 billion, and we've got really good funding with available funds of 127 million. And I really want to hone in on this work in hand for a moment, because what it provides is really clear visibility moving forward. And when you think about the nature of our earnings profile today, it gives us very clear visibility into the future, which allows us to provide some very clear forward-looking views, which I'll touch on in a moment. But I think also it's really important to understand that we are winning a lot of contracts, and good contracts with good clients. But they're very much contracts that fit within our skill sets, within our geographies, and is very much aligned to our strategy and what we do. And what that provides us with is the opportunity moving forward to really just focus on what we have and cross-sell other parts of our business in, win some of that ad hoc work where your fixed cost base is already paid for, so the margin accretion is better. And if we focus just on that in the next couple of years, the growth trajectory will be really, really strong for our business moving forward. So it's really all in front of us, and it's about execution and really looking after the key clients that we currently have. I think ultimately the strategic transformation of SRG Global to a diversified industrial services business is delivering results. And you're seeing clear evidence of that today, and I'll touch on in a moment the strategic transformation of SRG Global. It has been significant. We are not the business today that we were 3 or 4 years ago. And I think ultimately we're expecting FY23 EBITDA to be circa 25% higher than the FY22 EBITDA result. I think that conveys a number of messages. It conveys confidence, it conveys certainty of the outlook moving forward, but it's not about 1 year for us. We're continuing to grow the business, and we see a really strong growth profile for SRG Global over the next 3 to 5 years. FY22 is a really good year. FY23 will be a really good year, but it's ultimately about the growth over the next 3 to 5 years and really executing the strategy that we've had in place for a long period of time. So look, a really pleasing set of results and highlights, but I really want to perhaps shift gears now and sort of segue a little bit into strategy and just the strategic transformation that we've undergone as a company. So if we flick a couple of slides to slide 4, this really highlights where we were 3 to 4 years ago. And very much a business that was very heavily weighted to projects and one-off construction projects. So very much, those types of businesses, it's very much about feeding. You need to keep feeding the beast. You need to keep winning, finding new clients, finding new projects. And if you look at the profile of the business, about 30% of it was annuity recurring term and about 70% project-based. That was 3 to 4 years ago with a sort of circa 40 million EBITDA financial performance. If you look as to where we are today, as we move to slide 5, we've completely flipped. More than 2/3 of the company's earnings are now annuity recurring in nature. And when I talk about annuity recurring, I'm talking about long-term contracts. It's very much, it's an enormous change. A lot of companies talk about transitioning to annuity recurring. What you're seeing is evidence of us delivering against that. And you can not only are you seeing the evidence of that, it's the quality now of the revenue and earnings that we're generating is very, very different in terms of its risk profile to what we were 3 to 4 years ago. And that's been done against a very, very challenging backdrop. And I think, again, that is evidence of culture and our people stepping up and really engaging with this strategic transformation that we've been embarking on. If we move to slide 6, it's really all about executing what has been a very clear strategy for a long period of time. Now, this is not new. This has been a very, very clear strategy and pathway that we've been on. In some ways, I almost feel like I'm boring. In some ways, I'm talking about the same strategy again and again and again. But it's about the discipline and focus and execution of that strategy. That's what's driving our performance. Very much in the growth phase of that strategy. And what did we say we were going to do? It was about step change growth in recurring asset maintenance services, innovation and selective growth in mining services, targeted growth in civil infrastructure construction and remediation, specialist services and products in building construction with key repeat clients. And really the key plank of this growth phase was really transitioning this business to an annuity recurring style business with 2/3 annuity and 1/3 project based. And if we move to slide 7, what you're seeing is clear evidence of delivery against that strategy. We are doing everything that we said we would do. And in my mind, we're probably a little bit ahead of schedule in terms of where I would have expected to be at this point in time, in terms of just making that complete shift in terms of the earnings profile and the risk of our business and the quality of the earnings that we now have. If you said to me 3 or 4 years ago we'd be going through a pandemic and delivering against this, I probably would have thought it would be a bridge too far. And I think today is really clear evidence of us delivering against that strategy. It is a phenomenal performance. I think for us, it's about staying humbled, disciplined and focused, but it's also reflecting on how far we've come. It's not something I'm great at. I'm generally always looking at, where are we going next, but really reflecting on how far we've come and the strategic transformation that we've made is significant. And the business we are today, as we move to slide 8, is not the business we were. Now, this is us today. And we are a diversified industrial services company. And I want to talk about the diversified industrial services. I think the strength is the diversity and very much a services-orientated business. And what we do, we bring an engineering mindset to deliver critical services for major industry across the entire asset life cycle of engineer, construct and sustain. And I want to break that down a little bit further. When I talk about an engineering mindset, I'm talking about a business that is smart, technical, innovative, and really brings that engineering DNA to the way it approaches business. And it's to deliver critical services. This is not fitting out kitchens, watering haul roads, or doing the laundry. These are critical services for our clients. Critical services such as time-critical maintenance, relining of furnaces in production facilities, the anchoring of critical water infrastructure such as dams, specialist transport infrastructure in complex bridges, engineering of facades for hospitals, schools, universities, stadiums, car parks, shopping centres and commercial towers. It's the front end of the production mining cycle in production, drill and blast, and geotechnical services, which are all around ground stabilisation. So these are critical services, and why that's important for our investors to understand is when they're critical, they've got to be done right. And to me, it makes us very sticky with our clients because they're critical to our clients and they value them. And that to me is what we do is we provide critical services. And that to me is something that really is ensuring that we have very deep relationships with our clients. And as I said earlier around our work in hand, if we just focus and really service deeply the clients that we have with the footprint that we've grown today, the opportunity and the growth in front of us over the next few years is significant. And our vision, what we want to be, is the most sought after in what we do. Some might say market leader, number one. For us, it's about being the most sought after in what we do. So when our clients have a challenge, a problem, an opportunity, the first people they think of when they pick up the phone is SRG Global. And what we pride ourselves on is making the complex simple, and bringing that engineering smarts, the engineering mindset, making the complex simple for our clients. The business we are today is not the business we were. If we move to slide 9, I think you'll see evidence of that in our profile today. We have 3 operating segments on which we report on: asset maintenance, mining services, and engineering and construction. We have more than 2,600 people across more than 20 industries, which really highlights the diversity of the business and that diversified industrial services company we are today, across more than 80 sites in 6 countries. FY22 it'll be revenues of circa 650 million. FY23 is going to be around that 800 mark, and we're a market cap of 285 million. But I think it's also important for our investors to understand is the deep engagement from management. And if you look at the ownership structure of SRG Global, circa 12% of the company is owned by management and board. And that runs quite deep within the business. So very much we have leaders and deep within the business that are engaged and aligned with our shareholders and shareholder interests. And I think that really helps drive that whole cross-selling mentality and bringing other parts of our business together with each other. I hate the word cross-selling, but it's very much that's what's delivering our success, and that's what will drive our future moving forward. It's taking the diverse services that we have and really servicing the clients that we have today. And I think you can see from the profile, we are not the business that we were. I want to switch gears again now and move into where we are going, the future. If you look at slide 11, where we are, sort of around that 57 million EBITDA mark, 2/3 annuity earnings. If we move to slide 12, this is a 1-year look forward. We expect earnings to be circa 25% higher than FY22, which is a really strong, it's an incredibly strong growth year in front of us. And clearly we're conveying a lot of confidence here coming out in July, stating that to the market, and that is off the back of really good visibility moving forward, and really, I guess how we're seeing the market play out for us. That's a 1-year lens, but it's about us continuing to build the business we want to be, and that's, if we move to slide 13, it's about building the most sought after diversified industrial services business. We are very much in the growth phase of that strategy. It's a very, very clear strategy that we're executing against. We will over time morph into the leadership phase of that strategy, and we're delivering against a number of those elements already today. A zero harm ESG industry leader, a recognised employer and partner of choice. In this leadership phase, we will be growing the engineered products business across all SRG operating segments, both domestically and internationally. When I talk about engineered products, I'm talking about engineering and structural products that are specified products in the infrastructure and the mining space as well. And why do I like products? It's a growing business for us. In FY22, it turned over circa $30 million. We've just moved our manufacturing facilities to a purpose-built facility in Sydney. And I'm really bullish on products because ultimately it's about servicing the same clients we have today, the same sectors we play in today, and the same geographies that we play in today. And why I like products is you make it, you sell it, you get paid. So it's very much the risk profile is very, very low from a commercial risk perspective. But it's really cross-selling into industries and geographies that we play in today. And this business has made a terrific leap forward over the last 12 months. And I ultimately see this business becoming the 4th operating segment of the group in the next 5 years. And that's, I guess, a long-term look ahead in terms of where we are taking that business. In the leadership phase, we will look at selective strategic acquisitions to complement either our capability or our footprint. What are perhaps some of the key areas of focus in that regard? Certainly asset services is one, particularly on the east coast of Australia, as we continue to grow that area of the business. Certainly areas in terms of annuity, can we add to that particular mix? More mechanical maintenance capabilities, probably another area of potential focus. And also like monitoring, asset monitoring and inspection, where you're monitoring structures and you're then executing the work at the back end. So that's probably another area. If the right things present themselves, we will look at them. But ultimately for me, the organic opportunities are so strong in front of us that strategic acquisitions have got to make sense. And I think you can see our financial performance, the strength of our balance sheet. We are in a strong position, but we're under no pressure, and it's got to be very much aligned to us culturally and very much aligned to us from a strategic perspective. We want to continue to deliver consistent returns, and we ultimately see over time as the products element of the business grows, will sort of morph towards an 80% annuity recurring style business and a 20% project-based earnings business. But this is a very clear strategy. We've had it in place for a long period of time, and we'll continue to be focused and disciplined in executing against that strategy. Which I think as we move to slide 14, it's a good close in terms of why we're all here, which is the investment proposition of SRG Global. And we have end-to-end asset lifecycle capability. We self-perform pretty much everything that we do. We have a high-end capability. We play in diverse market sectors and geographies, and I touched on that earlier. That diversity gives us strength. It gives us that natural hedge that we're not exposed to any one sector or geography, but also gives us a broad platform on which to play. We have a high level of annuity earnings profile, which lowers the risk, brings certainty and visibility for investors moving forward, and at the right point in time, it will attract the appropriate multiple valuation. We're a highly scalable business model. You can see that we've been able to manage and execute the growth of our business, and we'll continue to do so moving forward. And we've structured the business to be a larger business than we are today. I think you're seeing evidence with operational execution, margin improvement within the business. We can grow the business, we can scale the business, and we can execute. And we are structured to be a bigger business than we are today. Very much a capital light investment profile, which will generate good cash. Free cash flow will be really positive, and that allows us to be not only a good growth stock, but also a good dividend-paying stock, paying really good fully franked yields, and really can bounce that kind of growth element and the dividend-paying element as well. So I think to me, the company's never been in a stronger position than we are today. In my now 8 years with the business, we're in an incredibly strong position, but in our view, we're just getting started in terms of what I think this company can be moving forward, and it's about being humble, focused and disciplined and continuing to deliver and step up for what we stand for as a company, which is live for the challenge, smart as a net together, never give up and have each other's backs. I really want to thank our shareholders for their continued support. I think it's a very exciting journey in front of us. I think the growth trajectory is really strong moving forward, and I really thank them, everyone on this call, for their ongoing support. Particularly want to thank our people. I'm very proud to come to work every day. You keep stepping up and delivering, and I'm really exciting for us to see how we continue to build this business moving forward. Thank you.
Great. Thanks, David. It's Roger Lee here, the CFO. So I'm going to take over on the Q&A management side of things. So there's a few questions here. Thank you, David. That was well done. So I'll endeavour to cover as much as I can. There are some common themes here, so I will try to group them up. So the first one is around cost escalations, and inflation and wage increases, and how they're being managed in the new contract pricing. Do contracts have provisions to allow for these increases?
I think it's a very topical one. I've touched on it a little bit in the presentation in terms of the lion's share of our contracts, long-term contracts that have rise and fall mechanisms in them. They're generally linked to the site, which is really important in terms of being linked to the actual site-based costs, and that's something that with those rise and fall mechanisms in the contracts, it allows us to pass that cost onto our clients. You obviously have to manage it and perform, but it gives us that real protection in that arm. And I think you're seeing that, I guess the continued performance of the business against that sort of cost escalation, the margins we're generating, is giving us that protection.
All right, awesome, thank you. The next one is just around, are there any unusual items in the margin outcome that's one-off, etc.?
Really simple answer, no.
Yeah. Another one around the engineered product sales. I think you covered that off already, Dave, in the discussion.
Roughly 22 is about 30 million.
Yeah.
Yep.
Another one on the mining services EBITDA performance. I think that's a really strong one. You covered that off. The improvement in the work in hand, great improvement in work in hand. How's the pipeline looking?
Well, the pipeline's really strong. We expect to win more contracts moving forward. The horizon's really positive for us. But again, the opportunity for us is not just on winning new contracts. It's about really with the footprint that we now have to cross-sell other parts of the business, to win that ad hoc work by being on site. And I think moving forward, just as the operating environment becomes easier, that should help with margin as well. So it'll come across a broad range of growth. A lot of these things won't be announceable events, and I think that's really important for shareholders to understand, is that we have a really positive pipeline, but if we just focus within our contracts as well, that will drive a lot of our performance in the next 2 to 3 years. And clearly coming out at the start of the year with a 25% uplift outlook in early July really conveys that confidence of our trajectory.
All right, terrific. Another couple on cost inflations, and I think we've covered that off, David. Another one here. Great to see the focus on culture, margin, cash flow, recurring revenue, great outlook. Some comments around WBHO. You touched on being purchased out of administration. What's the outlook for FY23 for that business?
Yeah, it'll be positive. I think I sort of called out earlier, our focus in the first few months was really getting the business integrated. If you recall how we bought the business, it was via a deed of company arrangement. So we only took on contracts with either cost plus or schedule of rates. So that's less certain fixed cost contracts behind, but brought the people along with us. So the first few months was more around the business washing its face and sort of building the business back up. So we expect FY23 to be a really positive, profitable and cash generative year for that arm of the business.
Yeah, for sure. And just some more flavour around the defence sector that we're playing in, David, and the view of it from an opportunity perspective and this year.
Look, I think it's what I like about our business. We play across a broad range of industries, as we've sort of shown in our profile. Defence is a newer one for us. We've now started penetrating that market in sort of our structures and facades business, and we think there's really good opportunity across the broad range of services that we offer across the group. So I think that will ultimately open up more opportunities for us to cross-sell other parts of our business across the country. And look, it's one of a number of sectors that have got good positive growth, macro growth drivers in them.
Yeah, terrific. One on dividends. Wouldn't be a meeting with investors without a question on dividends. What's your view on dividend rates? Is there a set policy for dividends?
Well, clearly we're going through the full year results, and as I've said earlier, we have no set policy. We generally pay that sort of 50 to 60% range. I think our first half dividend was 1.5 cents, up from 1 cent the previous half. Our full year dividend last year was 1 cent. I think the first half this year was 1.5. And look, I'm not going to give guidance on dividends, but you can see the cash generation, the commentary around wanting to be a good dividend paying stock, and we think we can manage the balance of that, and then you would like to think we'll be a good dividend paying stock in the second half as well.
Yep. One around our geography and where we generate our revenue, and what's our view around which geographies are going to give us the best opportunities?
Well, look, I think it's across the board. Across Australia and New Zealand are probably the lion's share of where we play today. We put a lot of our international work on ice through the pandemic, but the international market is now starting to open up for us again. We're about to go back to South Africa to do another dam anchoring job, and certainly products sort of in that UK space is another area that we're playing in to some degree today, and then more broadly areas such as the US for dams. We're doing some ECI work in that region of the market as well. So really, from my perspective, internationally, not really factoring in really anything in the FY23 outlook, anything meaningful from the international perspective, but really more see that as a medium-term growth driver for us. We've been able to operate successfully internationally now for over 30 years. We focused much more closely to home through the last 2 to 3 years for very clear reasons, but that market will open up for us again. We're structured the right way that it'll be more around doing certain projects and getting out, which will generate really good margin for us. And generally, when we do projects internationally, they perform really, really well. So it's more a medium-term play. Yeah.
I think you covered off another theme around the international market being part of SRG's plans going forward, and I think very much.
Absolutely.
Yeah. And just looking through to see whether I missed anything. Just probably one last one around managing access to labour and how we're managing that, and as well as the people retention element.
Yeah, I'll probably break it down into 2 parts. I mean, the labour is obviously a very hot topic, and certainly we are a very spread and diverse business, which gives us some natural protection, but certainly in pockets, and labour is more challenging, and it's one that we're managing really well. I wouldn't say it's easy, but we're managing it well. When you look at the profile of our business, a much more heavily weighted sort of long-term contract style business that kind of attracts a different personality, someone that likes that long-term certainty and tenure. And so I think whilst our operational HR teams have done a terrific job bringing people in, because we have continued to grow our numbers significantly. I wouldn't say it's easy, but there's a lot of paddling happening under the water. There's one that we're doing well. I think SRG is a really good proposition for people wanting to come to work, and that all comes down to culture. And you talk about people retention. It's quite interesting. I've just done an internal sort of roadshow across the business and haven't been able to do that really in the last 2 to 3 years. And whilst video is great, the power of face-to-face is really important. And it was really, I know it was uplifting for me personally, but probably similar to this call. It was very much about sort of how we've transformed in the business we are today, and just the buy-in engagement from our people was really uplifting for me personally, just how engaged they are. They can see the holistic strategy and how it's coming together. They've all got an opportunity to have a voice and play and really contribute, and they see how they fit into executing the strategy and the growth of this business. And to me, that gives me more confidence than ever that we're on the right pathway, and just culturally, just how strong we are and just how people are all driving our business moving forward. It was a fantastic couple of weeks, and there's still more to come. But to me, I'm not a big believer in checkbook HR. Ultimately, if you're doing that, then to me, you retain people based on culture and being a good place to work for, and people having the opportunity to be part of something bigger than themselves and being able to see how they contribute and achieve their own goals in their career as well. And I think SRG Global does a terrific job in that regard, and it ultimately comes down to the people that we have in our business.
All right, terrific. I think that's about it. So thank you, David. And I'll hand over to you to close, Dave.
Look, I want to again thank everyone for the call. It's a good day. We'll have some more granular detail at the full year results. We probably just felt, given the sort of broader market, was worth providing an update on where we are and where we're going. And look, in our view, we're just getting started in terms of where we're going, but we're going to be humble, focused, and disciplined in the way that we execute moving forward. And we've got really clear pathway on where we're going, and we're looking forward to you continuing to benefit from the journey we're on.
Thanks.